It's no longer a $1 trillion market. In a drastic set of events, the total market capitalization for crypto has slid to $870 billion in just a few short days. At the heart of the sell-off, FTX's liquidity issues. The too big, to fail exchange based in the Bahamas has prompted the latest downturn in the sector. In the last several days, there have been mounting concerns about FTX's apparent insolvency. The price of FTX's native token remains in free fall. FTT token is down more than 80% over the past 5 days. In a rapid series of events that unfolded largely on Twitter, FTX attempted to sell a large part of its operating business to rival Binance after a wave of withdrawals threatened to take FTX down. But just as quickly as Binance offered its rescue package in the form of an acquisition, the company retrenched it. Crypto prices collapse as investor fears over FTX's solvency and the status of customer funds send Bitcoin and altcoin prices to multi-year lows. The live Bitcoin price today is $16,835.77 with a 24-hour trading volume of $24,969,025,308. We update our BTC to USD price in real time. Bitcoin is up 0.67% in the last 24 hours. The current coin market cap ranking is number 1, with a live market cap of $323,348,046,880. It has a circulating supply of 19,206,018 BTC coins and a max supply of 21 million BTC coins. FTX's hold could be as high as $6 billion. As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help. Every time a major player in an industry fails, retail consumers will suffer. We have seen over the last several years that the crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse user funds will be weeded out by the free market. Fears of a bank run and contagion spook the market. The May 2022 Terra Bank run and ultimate collapse of Luna since rebranded Luna Classic reverberated through the cryptocurrency market, at the time bringing about the first 7-week losing streak in Bitcoin's history. Analysts are drawing parallels between the current FTX bank run, the perceived large budget hole, and what happened to Terra earlier this year. These fears are adding to investors' fears about the cryptocurrency industry at large. Bitcoin's price plummets below $16,000 for the first time in 2 years. How investors should react. For the first time since crypto went mainstream during the COVID-19 pandemic, Bitcoin's price fell under $16,000 late Wednesday afternoon. This marks a fresh low for the token this year. And Bitcoin isn't alone. The entire crypto market is being rattled by the collapse of FTX, one of the fastest growing crypto exchanges in the world. Binance announced Wednesday that it would acquire FTX, following reports that FTX was in a sudden liquidity crunch. But after doing its corporate due diligence, Binance announced late Wednesday that it wouldn't move forward with the deal. That has further sent Bitcoin tumbling, falling to the $15,000 shortly after the announcement. Bitcoin spent most of October in the $19,000 price point, but managed to reclaim $20,000 just at the end of the month. It was holding steady until the FTX Binance drama started unfolding, which ultimately sent crypto investors into a frenzied bank run. Aside from the current crash, macroeconomic headwinds have held Bitcoin and the crypto market down throughout this year, with Bitcoin falling more than 70% in value since its all-time high last November. Bitcoin hasn't been above $50,000 since December 25, 2021. Despite the ups and downs, Bitcoin's price has seen a nearly 70% drop in value since its all-time high above $68,000 on November 10, set back by surging inflation, lagging recovery in the job market, and the Fed's ongoing signals that it would begin winding down pandemic measures to support the economy. The persistent threat of regulation. The cryptocurrency industry and regulators have a long history of not getting along, either due to various misconceptions or mistrust over the actual use case of digital assets. Without a working framework for crypto sector regulation, different countries and states have a plethora of conflicting policies on how cryptocurrencies are classified as assets and precisely what constitutes a legal payment system. The lack of clarity on this matter weighs on growth and innovation within the sector, and many analysts believe that the mainstreaming of cryptocurrencies cannot happen until a more universally agreed upon and understood set of laws is enacted. Risk assets are heavily impacted by investor sentiment, and this trend extends to Bitcoin and altcoins. To date, the threat of unfriendly cryptocurrency regulations or, in the worst case, an outright ban continues to impact crypto prices on a nearly monthly basis. After the FTX debacle, regulators may begin to step up strict enforcement, as signaled by Germany announcing it is looking into Coinbase's business practices. Scams and Ponzi's triggered liquidations and repeat blows to investor confidence. Scams, Ponzi schemes and sharp market volatility have also played a significant role in crypto prices crashing throughout 2022. Bad news and events that compromise market liquidity tend to cause catastrophic outcomes due to the lack of regulation, the youth of the cryptocurrency industry and the market being relatively small compared with equities markets. The implosion of Terra's Luna and Celsius network as well as the misuse of leverage and client funds by Three Arrows Capital, 3AC, were each responsible for successive blows to asset prices within the crypto market. Bitcoin is currently the largest asset by market capitalization in the sector, and historically, altcoin prices tend to follow whichever direction BTC price goes. As the Terra and Luna ecosystem collapsed on itself, Bitcoin price corrected sharply due to multiple liquidations occurring within Terra and investor sentiment tanked. The same happened with even greater magnitude when Voyager, 3AC and Celsius collapsed, erasing tens of billions in investor and protocol funds. What to expect for the rest of 2022 through 2023? The factors impacting falling prices within the crypto market are driven by FTX's capital crunch, coupled with investors' fears from previous insolvencies. In the meantime, investors' appetite for risk is likely to remain muted, and potential crypto traders might consider waiting for signs that US inflation has peaked and for the regulatory environment to become more clear. Please let us know what you think of this video in the comments section. We will be waiting to hear back from you. If you like this video, please share it and make sure you hit the subscribe and link button. While you are at it, don't forget to press the notification bell so YouTube can notify you whenever we drop a new video. Thanks for watching.